Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports. Even poking fun of the rest of the media, this is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls. I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, we're celebrating today. We celebrate every day on Ron Siegel Radio. Yeah, let's see. What do we have on today? Work like a dog day. Now, wait a second. I don't know. Do you have a dog? I've got a dog, okay? 90% of the day, she's laying and sleeping. So what does work like a dog mean? I mean, I want her schedule. She gets fed every single day, twice a day. She gets her water dish filled. She gets toys. She gets walks. She gets played with. And if we're not playing with her, she's sleeping. Work like a dog. Now I know why Josh didn't put a picture of that one out there. Now let's take a look. National Oyster Day. Are you an oyster person? Okay. You know the problem with oysters? So I've had oysters. Number one, I know I've had friends who eat oysters a lot, and they know the sizes and the all these different things that you're supposed to know about oysters, and what water they come from and what regions they come from, and I guess there's 100 different species of oysters. To me, I don't have a sophisticated palate, so it seems to me like whatever the sauce is that you put on them, that's what they taste like. Am I missing something here? I don't know. I'm just throwing it out there that good source of vitamin B12 and A is what they tell us. Chesapeake Bay produces more oysters in the world than any other body of water. Oysters consume almost 2 billion pounds of oysters. When they say that they consume almost 2 billion pounds of oysters each year around the world, does that include the shell? I don't know. I'm just, I guess I'm supposed to know this stuff when we talk about it. I should have done some homework on it, but
it is what it is.
Okay, let's take a look and see about the markets. Maybe I know a little more about the markets. Dow Jones Industrial Average is up 421 points. The Nasdaq is down right now, 148 points. Can't say too much about that with the run it's been on this last week. S&P 500 is down 8.78. Oil's down another 20 cents a barrel, 75.57. What's happening with gold? Wow, gold's up $155 an ounce. Yahoo! So, if you're into gold, you're probably happy to see it's been down a lot. It's still down probably 20% this year. And I look at the 10-year Treasury up 2 basis points. I don't like that one. Mortgage bond is down 9 basis points. Not a whole heck of a lot right there. And it's all about what's going on in the Middle East. If we get a good result out of there, if we get reports of a good result from the Middle East, we'll see some benefit in bonds. I will share with you, it doesn't matter what the report says. Iran's going to cheat. The president's going to say we have a good deal. None of it can be believed. The markets will react short term. Iran will cheat. We'll fire a couple missiles. Then we'll put it on pause again. Have we heard this song before? It's just, it's over and over and over again. And you just got to say,
What are you doing?
yeah. So let's look at some of the things that we can talk about, that we can know about. U.S. economy's expanded at a slower pace in the second quarter, 2026. New report out on that one. We saw that the services PMI, 54.1. Remember, anytime it's over 50, that's good. Under 50 means contraction, not as good. And I don't know where they come up with some of these numbers that keep looking good. But then we got the ADP jobs report. And we're going to talk about that in the Mortgage Minute. And I'm going to tell you, it's something we've been chatting about on Ron Siegel Radio for quite some time. And it's interesting how so many people refer to this in the context of AI. Now, we use AI quite a bit here at Ron Siegel Radio. We have no budget, right? So we're using AI, and it's amazing some of the things that you can do if you study. Now, the issue is they change every single day. If you think you know what's going on in AI today, just wait. Monday, it's going to be different. One of the people that I study with, I mastermind with, has been a big proponent of Claude. Get everything switched over to Claude. And he said the newest version of ChatGPT is better than Claude. Now, I've gone in there, as some of you that have followed the program know, I've been having some health issues. And I've been tracking my journey in a thread on ChatGPT. And it gives me some great insight because, the reports that come back from the labs, I don't understand them. So I ask it to translate them into English and at a 9th grade reading level. I'm a simple guy, and it does a great job. As I'm getting closer and closer to the surgery date, I wanted a recap of some of these things. And it said, okay, I can give you a comprehensive report. Wow, that sounds like a great idea. And it says you can study this and you can keep track of it and understand it. And I said, great idea, let's do it. And then it gave me a string of more questions to identify what I wanted. So I answered them. And then it gave me a string of more questions to narrow things down and ideas to make it even better. So I answered them. By the 4th or 5th time I put in there, is there any end to this? Can I get the report? Oh, yeah, we'll get you the report. About a week ago, still waiting. So I'm not sure I'm as sold on ChatGPT as others are. I actually, Josh, you'll like this one. So on Monday, we have the trade deadline for baseball. Yes, I must say I'm an Angels fan. It's a tough place to be, but I've been an Angel fan over 50 years.
I got a bad feeling about this.
So I'm watching the fire sale, the Angels getting rid of nearly every good player they had. And I put into ChatGPT right around 1 o'clock California time. Please tell me any updates with the Angels, who on any trades the Angels make. And it says, okay, and sends me nothing. I put in there, did they trade Silseth? Nothing. I look on Facebook, and I see that they traded Silseth. I'm sorry, Zepjon. Zepper John, some John, I don't know. ChatGPT was way behind the times. So I guess on current events, maybe that's not the time to set up for ChatGPT. I'm trying to figure out what's the right things to do. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. I'll tell you what the right things to do are. Stay tuned because we're going to be talking about big investors backing off on real estate. Is that your opening? One more credit move can raise your score in 30 days. Most people do the opposite. And your tax return says you can't afford it. Your bank statements say otherwise. Jumbo loans. We'll talk about that one. You can reach me anytime. Off-air number, 800-306-1990. 800-306-1990 or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numero one on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990. 800-306-1990. The Mortgage Minute today being brought to you by rsrloans.com, rsrloans.com. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They don't tell us points paid, points received, or they just give, or the APR, they only give us the number that goes in your mortgage calculator to determine your principal and interest payment. Conventional 30-year fixed, 6.674 down. Jumbo 30-year fixed, 6.739 up. FHA 30-year fixed, 6.425 down. A VA 30-year fixed, 6.306 up. And the USDA loan, rural areas, generally no down payment, 6.334. That one was down. Now, let's take a look and see what the markets are doing today, because that was yesterday's data. We want to know what today's data is. S&P 500 down 604. Not good. Oil down 15 cents at 75.62 a barrel. 10-year Treasury is up 2 basis points, 4.6364. And we've got the mortgage bond down 11 basis points, bonds down, rates up. Just mathematics. Now the question we have to look at is why? What's driving it? That's what's important to us, because anybody can tell you those numbers. They're one of the things, even ChatGPT can figure that out for you. Stocks, for the most part, continuing to move higher, poised to open. They're all-time highs. Mortgage bonds are slightly improved after softer than expected ADP data, and then the market flipped. WT oil prices, as I mentioned, trading at 75.65 a barrel, but could move meaningful lower as the U.S., Iran, and Oman are potentially preparing to announce a 60-day deal that would open the Strait of Hormuz.
Surprise, surprise, surprise.
That's according to Axios. It's rumored that the announcement could come as soon as today. The question I have here, now, over and under. So they're going to come up with a 60-day plan to open the Strait of Hormuz. Should we go with an over and under on a week? I think I would take an under on the week. It'll take a week before Iran breaks that deal. Not a question in my mind. Okay, I digress. Let's move back on and see what's going on here. Let's see. At the last Fed meeting, 3 Fed members, including Lori Logan, voted to hike rates a quarter, citing that the labor market was solid and strengthening. Maybe, we're going to have to give Lori Logan the J. Powell response.
Such an idiot.
Yeah.
Such an idiot.
So now let's take a look and see what's going on. She wanted to raise rates a quarter. And she says labor market solid and strengthening. We've seen the labor market weaken of late, and today's ADP report is more evidence of it. Where are you, Lori Logan?
Such an idiot.
ADP released their July employment report showing that there were 44,000 jobs created.
Ow!
Weaker than the estimate of 70,000. The previous report was also revised slightly lower from 98,000 to 95,000. Most of the jobs came from education and health services, which contributed 36,000 jobs. Since the beginning of the year, 2/3 of the jobs have come from this area, with all other sectors only averaging a total of 25,000 jobs per month. Most of the jobs are coming from healthcare, which is not a sign of a strong labor market, but more the results of gaining boomer demographic. The World Cup was estimated to account for roughly 180,000 jobs over the past few months while it was ongoing, but that created a bit of a head fake. It did temporarily add a lot of jobs to the leisure and hospitality sector, but now we're seeing that cool. In today's report, that sector shed 11,000 jobs.
Ow!
Turning to wages, workers staying at the same job saw their wages increase by 4.4% year over year. It has remained at this level the last few years. Job switchers, or those changing jobs, saw their pay increase 7% from last year, which is up from 6.8% previously. This has been rising the past few months. Bottom line, this was a weak report. While the ADP and BLS reports don't always sync up, this should point to a weaker BLS jobs report on Friday. That is the Mortgage Minute, brought to you by rsrloans.com, rsrloans.com. Sometimes it's scary when you think. Maybe it's scary when I think. So I thought I would take a look and see, being a long-term Angel fan. I'm reluctant. I'm kind of ambivalent to the Dodgers. I'm not a Dodger fan, but, you got to appreciate what they're doing as far as, just getting the best players available out there at any time. But I did look, and since the trade deadline, the Dodgers obviously got I think the best pitcher the best pitcher available. And being that he's won the last 2 Cy Youngs, I would say he's probably the best pitcher in baseball. But here's the question. The Angels, they're arguably the worst team in baseball. Now, I'm looking, and it looks like they lost. They didn't play on Monday, and they lost yesterday. So that kind of goes in line with what they do. They lose most of the time. Sunday, they won. While the Dodgers, I think, was it 5 in a row the Dodgers have lost? 5 or 6, something like that. So you got the best team in baseball losing, the worst team in baseball splitting the last couple games. Very fascinating. And the Dodgers' luxury tax is more than the Angels' payroll. So I digress. I guess I'd better get back to what we're supposed to be doing here. Mortgage Minute today being brought to you by rsrloans.com, rsrloans.com. Mortgage 101. I guess I should say Mortgage 101, right? Not Mortgage Minute. We already did the Mortgage Minute. In most of the country, $1 million loan sounds exotic. In Southern California, it's a 3-bedroom with a reasonable commute. So today, let us talk about what happens when your mortgage crosses a line most buyers do not even know exists. I'm Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. The line I am talking about is the conforming loan limit. Every year, federal guidelines set the maximum size for a loan that can be sold to Fannie Mae or Freddie Mac. For 2026, that number is $832,750 in most of the country. In high-cost counties like Los Angeles and Orange County, it runs up to $1,249,000. Cross that line by a $1, single dollar. And you're no longer shopping for a regular mortgage. You're shopping for a jumbo loan. Yes, I know you can put an extra dollar down so you're not there, but go with me on it. Why does that $1 matter so much? Because of where the loan officer goes, where the loan goes after closing. A conforming loan gets sold to Fannie Mae or Freddie Mac, which gives the lender a ready exit and keeps pricing competitive. A jumbo loan does not fit that box. The lender either keeps it on their own books or sells it to private investors. More risk for the lender means more scrutiny for you. The application starts to feel less like a standard mortgage and more like a private wealth review. Income, assets, even property itself all gets a closer look. So what does jumbo qualification actually look like? Credit score expectations run higher, and lenders want a clean recent history. No late payments. Down payments often start at 20%, although there are some that are lower. and climb from there, depending on the loan size and the property. And here's the one that surprises people: reserves. After your down payment and closing costs, lenders typically want to see several more months of mortgage payments sitting in liquid assets, not promised, sitting there. Run the math on a $1.6 million home. 20% down is $320,000, which makes the loan $1,280,000 over the line. So it's a jumbo, and the lender may want several months of payments in reserve on top of the down payment. This is why jumbo buyers need to plan their cash, not just their payment. Now, before that list scares you off, here is the flip side. Because jumbo lenders are not selling your loan to a government template, they can structure the loan to fit you, and that flexibility is where strategy lives. Take the self-employed buyer. The standard jumbo file wants 2 years of tax returns plus year-to-date financials. But if you're a business owner, you already know the problem. The write-offs that save you money in April shrink your income on paper. Your tax return tells the IRS story, not the real story. That's exactly why I offer programs built for how you actually earn. The bank statement loan qualifies you from the deposits flowing through your business or personal accounts, not your tax returns. You can see more information on the bank statement loans, rsrlinks.com/bank statement. rsrlinks.com/bank statements. Josh, you might check that one, make sure is it plural or not. rsrlinks.com/bank statements. Not your tax returns. And for contractors or 1099 professionals, the 1099 loan qualifies you from the 1099 forms your clients already send you every January. Your CPA did their job. We just need a loan that reads your income the way your business earns it. What about rates? Jumbo rates track the broader market, but with their own spread, and lately that spread has been wider than usual. Some weeks that work, some weeks that works for you. Some weeks against, which brings up a move most buyers never consider. If you're close to the line, sometimes a slightly bigger down payment drops you under the conforming limit and changes your entire pricing nature. Other times, a jumbo is a better structure, even at a different rate. The right answer depends on your credit, your cash, and how long you plan to keep the home. And you know what I always say, strategy beats rate always. And yes, it was rsrlinks.com/bank statement. If you already carry a jumbo loan with the same thinking applies to refinancing. With that spread moving around, refinance windows do open up. But the math only works when the new terms meaningfully improve your whole picture, not just shave the headline rate. Bring me your numbers before you chase one. Take a look at rsrlinks.com. I'm sorry, rsrlinks.com/DDD. rsrlinks.com/DDD. And there are some strategies in there to enhance your picture. One more thing, and this one about winning the house, not just financing it. Sellers and listing agents know that jumbo closings can take a little longer and carry more documentation. So when your jumbo offer lands next to one, the question in the seller's mind is simple. Which buyer is actually going to make it to the closing? That's exactly why my certified buyer program answers. That's exactly what my certified buyer program answers. Before you ever write an offer, we fully verify your income, your credit, and your funds. In the jumbo world where sellers expect delays, a fully verified buyer stands out like a cash offer. Go to rsrlinks.com/certified buyer. That's rsrlinks.com/certified buyer. A jumbo loan is not exotic. It's just a different category with its own rules. And the buyers who win in that category are the ones who walked in knowing the rules before they fell in love with the house. I'm Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. That is Mortgage 101, brought to you by rsrloans.com, rsrloans.com. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, big investors are backing off real estate purchases, and that's your opening. And more. Reach me anytime. Off air number 800-306-1990, 800-306-1990 or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Big investors are backing off, and that's your opening. For years, a lot of would-be home buyers have worried about the same thing. How do you compete with big investors who can swoop in, pay cash, and snap up the houses you want? Well, worry a little less, because right now those big investors aren't buying up the market, they're backing out of it. According to Redfin, investor home purchases just fell to their lowest levels since 2020, when the start of the pandemic temporarily caused pretty much all home buying to pull way back. Before that, you'd have to go all the way back to 2016 to find a time when investors bought this few homes. If you're watching us on ronsiegelradio.tv, any of our socials, or the ABC News and Talk AM 1490 and FM 98.1 video feed, you are seeing a chart. Investor home purchases fall to the lowest level since 2020. Why the step back? Two big reasons. First, Washington passed a housing law that takes aim at large institutional investors. To be clear, these mega investors were never as big a part of the market as the headlines made it sound. They've always made up a relatively small slice of the housing pie. But when the law still targeted the largest ones, and it worked fast, according to Tom Malone, principal economist at Cotality, quote, when Washington announced its intention to curb institutional investors' home buying, the market reacted. Cotality data shows that investment by mega investors who own 1,000 or more properties retracted almost instantly, unquote. Second, the housing market has cooled. Price growth has slowed in much of the country, and in some markets, prices are dipping. That makes the math a lot less appealing for investors betting on quick gains. Lance Lambert, CEO of Resi Club, explains, quote, ever since rates spiked and the pandemic housing boom fizzled out in the spring of 2022, institutional single-family rental, SFR, operators have pulled way back from buying up homes on the resale market. The math just isn't as appealing right now. Home prices and rents are no longer ripping. Holding costs, property taxes, and insurance have jumped. Capital markets have shifted their attention elsewhere, and elevated materials prices make renovations expensive, unquote. This is the part most people miss. Big investors aren't just slowing down their purchases. Data from Parcel Labs and Resi Club shows the largest institutional investors are now selling more homes than they're buying, and that gap is growing these past 4 quarters, and you can see that on the chart on screen. Every one of those homes go right back into the market for buyers like you. And since big investors tend to own homes at the lower end of the price range, a lot of what they're selling is exactly the kind of home first-time buyers are looking for. As Malone puts it, quote, this sudden drop-off in institutional investment is a signal to first-time home buyers that there's an opening, unquote. Less competition from deep-pocketed buyers, more homes hitting the market, and many of them at prices that work for a first purchases. That's a shift that works in your favor. Bottom line, big investors are stepping back and they're adding homes to the market as they go. If you've been waiting for a better shot at buying, this could be it. Let's connect so you can see what's popping up in your area. You may have more options than you think. That is the Real-Time Real Estate segment brought to you by rsrmoney.com, rsrmoney.com. And as let's see, you are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, one credit move can raise your score in 30 days. Most people do the opposite. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Your Credit Matters segment today being brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. Most people try to fix their credit before a mortgage are working on the wrong problem. They spend months on things that barely move the needle and skip the one move that can raise a score in 30 days. I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. Every week, I hear the same credit score questions. Will the late payment ruin me? Should I close that old card? Does checking my own score hurt it? And the gap between what people think moves a score and what actually moves a score is wide. Wide enough to cost you a house. Let's clear it up. Question 1. How fast can a score improve? That depends on what's dragging it down. A 30-day late payment fades slowly. There is no magic date when it disappears. It ages out gradually, and no quick fix speeds that up. But high credit card balances, different animal entirely. Utilization, which is the percentage of your credit limit you're using, gets recalculated every single month. Pay a maxed out credit card down before the statement closes, and you can see a real jump at the very next refresh. That is one of the only moves with a near immediate payoff. And the timing is everything. Before the statement closes, not after the due date, but before the statement closes. rsrccpayment.com, rsrccpayment.com. And that is the right way to do this, not just a right week. Most people pay their credit card once a month and never think about it when the balance actually gets reported to the bureaus. I put together a walkthrough that shows you exactly how to time and structure your credit card payments so your utilization reports the way you want it to for FICO scoring purposes. It's at rsrccpayment.com. That's rsrccpayment.com. Question 2. Should you pay off an old collection account? The answer has changed. Most modern scoring models now ignore paid collections entirely. So settling that old medical bill or phone debt can help you, not hurt you. The old advice of don't touch it, you'll reset the clock is outdated for most models. Question 3. Should you close old credit cards? Usually no. It feels like the responsible thing to do. It is usually a mistake. Length of credit history matters, and an old card with no annual fee is quietly doing more work for your score than you realize. The exception is a card with a big annual fee that you never use. Sometimes the savings beat the small score impact. Run the numbers before you cut it up. Question 4, and this is the big one if you're house hunting. Timing. Multiple mortgage inquiries inside a short window count as one hard pull for scoring purposes. So shopping lenders does not push you the way applying for 5 credit cards would. What does hurt is opening new revolving accounts right before a mortgage application. New accounts lower your average age of credit and can spike your utilization at the worst possible moment. Once you're serious about qualifying, freeze new credit activity. No new store cards, no new car loan, no 0% for 12 months furniture deal for the house you don't own yet. And check all 3 of your credit reports before you apply. Errors are more common than you'd think, and disputes take 30 to 60 days to resolve. You do not want to discover a mistake 2 weeks before closing. If you want a simple way to check and monitor your credit, I offer that at rsrlinks.com/FICO. Now, why does all this matter so much? Picture this. A buyer is looking at a $660,000 mortgage here in Southern California. Their score sits just below a pricing threshold. Nothing dramatic, just a maxed out card they were planning to pay off eventually. Paying that card down before the statement closed moved them into a better pricing tier. On a loan that size, a better tier can mean payment difference that adds up to tens of thousands of dollars over the life of the loan. Same house, same income, same down payment, different strategy. And you know it, here it comes. Strategy beats rate always. Credit scores reward consistency more than quick fixes. Pay on time, keep balances low, don't open new accounts in the months before you apply. And before you make any big credit move, talk with someone who knows how to mortgage pricing actually works. Because a well-meaning move at the wrong time can cost you 6 months. So here is your next step. Paying that card down before the statement closes fixes your score this month, but you deserve better than a card you pay down and run right back up. You deserve a date. I offer a tool called Debt Done Date. Feed it every debt you carry, and it runs your household through 82 different types of analysis to find the plan that pays it all off by a real date, not just a lower rate. Go to rsrlinks.com/DDD. That's rsrlinks.com/DDD. And if you're not sure whether a credit decision will help or hurt your approval, let's spend 15 minutes on Zoom before you make it. Book that at bookrs15.com, bookrs15.com. I'm Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. Thanks for listening to the Your Credit Matters segment brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. As always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.